Welcome to Season 2 of FinTech's A podcast by the one and only policy shop for Canada's fintech scene. I'm Alex, and I'll be your host. Join me as I talk to the people who are making a big difference in the lives of Canadians. Today, our guest is Jeremy Wilmot. He's the CEO of Interac, one of a few organizations at the heart of Canada's payment system. We talked to Jeremy about how he ended up in payments, on whether there's a need for an RTR in Canada, and some exciting stuff that Interac has on the horizon. Jeremy, it's a pleasure to have you here today.
It's great to be here. Thanks, Alexander.
So look, few people in the world even wonder how their money moves, let alone decide to build a career in it. Most people I talk to don't even see the payments ecosystem as an industry. Like they literally do not think about it at all. So how does one like you end up in payments?
Well, this is actually only the third company I've ever worked for. So I worked for Japanese technology company Fujitsu, and then I worked for a US corporation, ACI. And now I'm at Interac, and actually all three were in the payment space. So I'd say it wasn't by design. I ended up at Fujitsu getting involved in ATMs, switch software, internet banking, and then the American company ACI reached out and said, "Hey, would you like to go to South Africa and run our subsidiary in South Africa?" And actually, that was the much more attractive and appealing part of their offer versus them being a leader in payments. It was to run my own P&L. But I thought that'd be great. Why don't I join this sort of US company for a few years and then see where it goes from there? 22 years later, I was still there. But I had traveled the world with them from South Africa to Madrid to Singapore to Florida. I'd done a lot of different jobs for them, running different field operations around the world. And then in executive roles as chief marketing officer, group president of the banks, and then lastly as chief products officer. And all of that gave me a huge insight into global markets, into real-time payments, fraud, and just payment acceptance in general. So, and what I thought would be a short stint, as I said, was nearly a quarter of a century, and that's my trade today. And as I looked around the world and looked at different countries and which countries were on the cusp of great things, Canada for me was one of those countries. Canada has fabulous infrastructure in place, and I think the stars are aligning, is at the cusp of something really big here. The Retail Payments Activities Act is coming into fruition. The consumer-driven banking is coming together. RTR has been a long, difficult journey, but it's coming together. And then you have external forces with big tech and crypto and new digital infrastructure. I just think there's a lot coming together that makes it an exciting time to be in Canada and to be running a company that's as trusted and well positioned as Interac is. And I love the people who work here or are here for a reason. They have a real purpose and they want to make a difference to how digital payments is used by Canadians. And it's a company, we're a relatively small company, but we're the heart of a lot of digital payment infrastructure, and we can make a real difference. So put all that together, it's I want to stay in the space, in the sector of digital payments, and Interac is as good a place as any in order to apply that trade. And I think Canada really is on the edge of something pretty cool and exciting and fun. And so love the idea of being part of that.
I'm struck by your optimism, in large part because I encounter so much pessimism in the line of work that I'm in, especially when it comes to our financial sector. People talk about the slow pace at which we're evolving. I do feel like the truth is probably somewhere in the middle. Like when I think about the fact that in the early days, Canada was ahead of the world in so many ways. And though we might not be the first jurisdiction to do some of these more novel things, we still are making progress towards it. I want to revisit that tension with you. I say revisit because I just want to ask you something else about payments more generally. There's a lot of inside baseball in payments, jargon, acronyms, tomes of rules. Talking to payments lawyers and policy professionals is like talking to an alien race sometimes. I'm a policy wonk. I've worked in a few different policy areas. None has been so difficult to penetrate as payments. Why are payments so esoteric?
So, well, let me comment on your first reaction, struck by my optimism. And I've seen that. So I've been here now for 15, 16 months. And I think that change requires change agents. I think there are a number of change agents in the ecosystem today. And you see them advocating online and LinkedIn. You see them at conferences. And so, change is all about the environment that enables the change, number one. And as I said, I think RPAA, RTR, and the consumer-driven banking are elements of that infrastructure that's there. And it requires companies and individuals to make that difference. And I do think amongst Canadians, there are a lot of people here who have the capability, the wherewithal, and the motivation to want to make a change. And that's what it takes. So, often change can be restricted because the infrastructure is not in place. That's not the case here. Often change could be restricted because people can't see the target state and where they're going and what good looks like. That's not the case here. Because there aren't the resources, money, and time. That's not the case here. So I actually don't think that the case for change, the opportunity for change, is something that is out of our grasp. I think it's absolutely, something that's within our grasp. Now, payments have been digital payments are 70 years old. If you want to talk about credit card payments and start of credit card payments as the start on that road of digital payments, that started in the 50s in New York. And then card-based payments that then enabled ATMs and point-of-sale devices. They in the 60s and 70s they really started to become common use. And then now we have non-card payments that are settled real time versus settled later. And they are also the oldest real time payment system, I believe, is the Sengen system in Japan that actually was introduced in the late 70s. And so real-time settled systems are pretty old as well. And when you have this many decades, multi-generations, technology that was different in the old days than it was to today, that creates a challenge. And so you have a lot of legacy infrastructure, legacy systems in place that the challenge there, you could either change it, that's hard, or you could wrap it up and try and isolate it and then use new technologies to surround it. And the answer is typically a little bit of both. So that's what makes change hard. Is that infrastructure and technology debt that's there. So whilst there is a motivation and a want, there are clearly challenges that are sitting in the infrastructure as well. But that shouldn't stop us. Again, as I said, with RPA, RTR, and consumer driven banking, I think we got some good building blocks there, and we can really accelerate the innovation here.
I sometimes wonder whether payments are that challenging, and I still maintain esoteric, difficult to understand the logic as to why things are the way they are in all cases. Is it the same way around the world, or is there some regional variation? Like, how did you find it getting immersed in Canada's payment scene with Interac, given everything you've seen around the world?
Yeah, there's a good phrase in Southeast Asia, same but different. And I think that payments are payments. I want to pay you. I want to pay a merchant. I want to pay someone across the world. It's the same. It's an exchange of value from source of good funds in one place to a source of good funds in another place, an originating bank and a receiving bank, and you need trusted entities at either end. So you need banks who are regulated and insured, and people can trust at either end. And a lot of the innovation happens in between and in the middle. Having said that, when you then look across the world and the different variations and permutations and how the mix of payments, they're very different depending on where you are. We love to look at the payment system south of the border, and just the sheer scale and size is obviously very different in the US than it is here. There is a lot of big tech innovation that is happening. Apple, Google, and what you can do south of the border is significantly more than you can do here. With Apple as an example, often people look at Australia and Canada and Australia to sort of similar-ish markets. I think the debit setup is very different there. The e-transfer equivalent is different. They have real-time settlement system in place now for some 10 years. And so the fundamentals are the same. A lot of the sort of core payment types, core way that you settle, ways that you're interacting with customers, they're the same, but the configuration and the mix is often different in those areas. And then you have another piece on top of that, which is sort of regional or global payment systems. And regional payment systems have come about in Europe and Southeast Asia. I think about in particular ASEAN Pay and the European Union and the payment initiatives that they put in place. And they're sort of locally driven. And then you have the global capabilities through the Visas and the MasterCard that sort of, and SWIFT that stitch the world together. So it is very complex and it's hundreds of years old. Corresponding banking relationships for cross-border transactions, they're hundreds of years old, some of them. So it is hard to understand. It is very complex, and everyone wants to transact easily, but no one wants to lose a payment. And those two things are, need to be done at the same time. And there's a lot of complexity that sits behind the payment infrastructure in the world today.
Do you think that complexity is an optimal level of complexity, or do you think it's all way more complex than it needs to be because we, started in a particular place and people just kept adding things on? You'd mentioned technology debt. Like, do we also have maybe, rule debt as well, which makes it so that, no single person can really understand how all of this works, but it just does.
It is very complex. I mean, that's moving money is extremely complex, and there's just a lot of. It's good to study the history. It's good to study the history behind banknotes. And there was a time when governments were not the producer of banknotes. It was actually private companies. So if you go to London in the UK and you can go to the Bank of England Museum and you can see all of these banknotes that are they're being printed by private banks and private entities. And it was some time before government stepped in order to simplify that and to ensure that there was only one issue of the British pound, not 10 or 20. And so, with innovation, I think comes a lot of sort of smaller, more nimble, agile ways of thinking and companies who will do something that is seemingly much simpler and much easier for us all to consume. I think a lot of people know Wise, and they've revolutionized the cross-border international payments. I use it a lot. I got a family who's all over the world. It's super easy. And but underneath that super easy experience is a huge amount of complexity that Wise is managing. Sometimes they're managing a correspondent banking relationship. Sometimes they're banking themselves and just holding two bank accounts in different currencies and crediting and debiting themselves. Sometimes they're actually settling on real-time settlement systems bilaterally. The key is they're doing all of that in different ways because they don't want you to care whether you're trying to send Canadian dollars to Australia or US dollars to Brazil. They don't want you to care. They just want you to have exactly the same user experience, have the similar information that you need for a receiver. But the complexity underneath is technology debt driven. It's government regulation driven. It's commercial entity rule driven, as you just suggested. That there are many complexities under fintech innovation. And so is it optimal? No, it's not optimal. But is it reality? Yeah, it's reality. And we got to face reality. That is reality. Now innovate on top of that.
Do you think payments are getting more and more complex over time and will continue to get more and more complex? Or do you think they're simplifying? Do you think, it's chaos, there's no trend?
No, simplify. And the fintech movement is simplifying for you and me as individuals, or for small, medium businesses, or for merchants receiving payments. They're looking for simplification, high level of automation, the ability to reconcile. So businesses, the big inefficiency for businesses in payments is reconciliation and reporting. And that is highly complex. And those B2B payment innovators, they are achieving a sort of straight through processing, highly automated reconciliation reporting capability that has huge efficiency gains for businesses. For you and me, I just talked about that cross-border payment that is just digital. It's easy. Face ID, bang, 10 seconds later, I just share the status of that payment on WhatsApp. It's simplicity. So simplicity, one of the things that we're doing at Interac is to be highly product centric. What does that mean? That means that you understand very well the needs and wants of the customer, whether it's a corporate or an individual, and you understand what they need and want. You haven't necessarily asked them what they need and want because they may not know exactly what they need and want, especially when it comes to a payment, because it's so esoteric, to your point. And so therefore you need to be able to say, okay, here is the need for that particular payment flow. I'm going to simplify it. I'm going to take all the complexity out of it. So I have to have fantastic back-end capabilities and maybe even, banking partners who are going to help me to simplify that as well. Because there's great value in the existing players as coming together with the new players.
Interac has a rich history, including in managing complexity and simplifying it for the different stakeholders in the financial ecosystem. Can you tell us a bit about that? Not many know about Interac and all that it's done over the decades, not just years.
Yeah, well, I'm certainly not the Interac history expert because we've been around for 40 years. But I tell you what I see from where I'm sitting. 40 years ago, it was not common for you to be able to use your card to access your cash through any ATM. You had to go to your own bank ATM. And Interac started there, as did many companies around the world, to create an interbank ATM withdrawal product, and that each of the banks would share the costs of their infrastructure and open access to everybody and reduce costs. And those 40 years later, those are key principles: open access, reduced costs of a really good digital payments capability. That then evolved into a debit card. And in the 90s, Canada became one of the highest usage debit card markets in the world. It led the world. In what I call the noughties, i.e. 2000s, 2009, Interac Canada became the leader in adopting chip and PIN away from signature. That was a huge move for fraud reduction. And Canada was the first, or one of the first, ubiquitous chip and PIN markets in the world. And then in the mid 2015, 2016, I think it was, Canada and Interac Debit became, the first Google Pay, Apple Pay, Samsung Pay, Tap in the market as well. So there's a lot of innovations that happened around that sort of what started as an ATM card and then became debit card, and is with 30 million Canadians today, and very widely used. And then another product started about 20 years ago, and that was e-transfer. And the beginning of e-transfer was an email money sending service. So you didn't need an account number, you could just use an email. And that has evolved over time, and it now has auto deposit capability. It has request to pay capability, has business to business reconciliation. About 30% of e-transfers are now business, not person to person. And it's being used over 100 million times a month by Canadians. It's very much a Canadian product. And so Interac e-transfer, I think, is part of, again, 30 million Canadians' everyday lives. And then lastly, and this I think is a nice unique that Interac has, and Canada has this great opportunity, is around digital ID and verification. And verification of you and I as individuals, verification of businesses as they're digitally transacting, and being able to selectively disclose information about yourself for a particular service that you require, not having to disclose everything. And we made 2 acquisitions in the space that have now put us in a position where we're serving 45 federal organizations with verification capabilities. We're serving 30 million bank accounts with verification capabilities, have the ability to authenticate official documents reliably. And so there is a near ubiquitous verification network capability. That's actually different from a lot of Interac type companies around the world. Debit, yes. Real-time settlement, a real-time payment system, yes. Verification, that's unusual. Why is it so important? It's critical for preventing and detecting fraud in a real-time environment. You need verification, and you need to put it together with the payment, whether the payment is a real-time payment or whether it's a card payment. And so having those 3 together, and as I said before, with that infrastructure, with that ecosystem, RPA, RTR, and consumer banking, again, they're all coming together. The stars are aligning, and there are some exciting new products that we're working on right now, which hopefully we'll talk about later, that I think then, are really bringing innovation to the market.
Lot of exciting stuff from the past, a lot of excitement about what's new. You'd mentioned the RTR. That's of much interest to so many fintech companies. What exactly is Interac doing to contribute to the modernization of our payment system, specifically around the RTR?
Yeah. So the RTR has very simply a front end and a back end. The back end is settling the money and the money actually moving, and the front end is what I would call an exchange, where companies can come and can participate, and they'll participate through that exchange. In a way, it's a sort of simplified layer of getting into a real-time settled system. So why are countries around the world putting in new real-time settlement systems? And it's part of the earlier conversation we had. Most have got real-time settlement systems already. They're referred to as RTGS systems, real-time gross settlement systems. They're used for high-value payments, extremely complex. Many of them have been written 50 years ago or decades ago. And they're being written on technology that is hard to open up access to, and it's hard to get economies of scale on. So 50 countries around the world over the last 10, 15 years have started a move towards a new real-time settlement system that is going to enable wider access. It's going to be able to scale using new technologies, and therefore it's going to have a lower unit cost than the current real-time settlement system. So this is not something that's specific to Canada. It's happening all over the world. UK started in 2006, some 18 years ago, and about 50 countries since then have introduced new real-time settlement systems, including in Australia that we talked about with MPP. And the US have done the same. The latest one is spent now. So it's been a long journey with RTR. I'm new to it, but I've seen it from the vantage point I had before. And I think what we're in now is a reset with a new team who is very expert in delivering on this. Interac's previous involvement was building the exchange, and we built it in partnership with IBM. And that was built, finished, and completed, and has actually been ready, waiting for the real-time settlement piece. So the reset has been more around the real-time settlement piece. And we now have IBM, CGI, and Interac working very closely with Payments Canada as the scheme operator for real-time for RTR. And we've put the plan in place. We're in development. We'll start testing next year. I think we should have good confidence in that now because that team's in place, and Payments Canada have got a great plan to pull us all together and to make that happen. So Interac will ensure that the exchange piece that's completed will now work with the new settlement piece and participate in the testing. Interac, secondly, will build a fraud capability that will be specific to RTR. And the great thing about Canada not being first is that it can learn from others. And around the world, real-time settlement systems, when they've come online, have been a major target for bad actors. And fraud has not been part of the original build. It's been an add-on later, reactive. We're not doing that. We're being proactive. We're going to put fraud into RTR from day one. And that's the first in the world. So we're working with Payments Canada in order to make that available. And then the third piece is that when we do go live, Interac will be the primary technical operator. So Payments Canada is the RTR scheme operator. We will be a partner to Payments Canada, and we'll do the technical operations. And the advantage of doing that is that e-transfer and RTR can then come together, and we can ensure efficiencies, reduce risk, and we can use our expertise on operating e-transfer for the last 20 years to ensure that we get the RTR operations right. And so those are the three roles that we're playing for Payments Canada and the RTR project.
So is it accurate to think of the RTR as e-transfer with real-time settlement on the back end? Or is the RTR something else or in addition to?
I think you were pretty much there. E-transfer will use RTR to settle. So for you and me, really, we're not going to see a difference. Because when you do an e-transfer today, I get the money as soon as you send it to me, but it actually hasn't been settled between the banks. And so when RTR goes live, it will be settled by the banks real time or near real time. And so they're different, but it's hopefully that clearly describes what it is.
So this thing we're calling the RTR exchange, is it different from e-transfer, or is it one and the same? It's the same thing.
We're going to look to, so as I said before, we're going to look to try and bring together, have the sort of synergy benefits of a 20-year e-transfer capability and a new tech stack on RTR Exchange. And so we want to, for efficiency reasons, bring those as close together as we possibly can. So e-transfer as a brand continues to be a brand in the marketplace. And if it can use the RTR exchange technological stack in totality, fantastic. And we're going to work towards, how we do that over coming years. Remember I said right at the beginning of this podcast, there are two ways to deal with technical debt. One is that you try and change it. And the other one is you wrap it up and isolate it and access it. And so, we've got the same challenge that payment providers worldwide have got. We've got a tech stack for e-transfer that is not based on the most modern capabilities, and therefore we've got to deal with that. And either we wrap it up and isolate it and access it, or we actually change it, or it's a combination of both. And RTR Exchange Code is going to be a key part of what the answer is going forward.
Right. I want to ask you more about the demand for real-time payments in this country. But before I do, quick digression. There's been a lot of attention on e-transfer fees at Indu, and whether they're symptomatic of anti-competitive conduct or whether they have anti-competitive effects. We know that volume-based pricing is not uncommon in other sectors as well. So what do you think about this attention?
Yeah, I'm very happy to be cooperating with Indu and working with Bank of Canada, our supervisor, in how we continue to open access, how we price in the appropriate way that enables small players and large players to be able to engage on our platforms, and I welcome that. And I think by the time you release this podcast, I would have had a public hearing at Indu, and I'll be talking in more detail about how we achieve that open access and fair playing field as it relates to pricing.
So let's abstract away from Interac e-transfer for a second and just talk about shared infrastructure in the abstract. When you're operating shared infrastructure, are there any benefits to the ecosystem of tiered pricing? Like, why isn't it more common for shared infrastructure to be priced flat in all sorts of sectors?
Yeah, so what's the benefit of shared infrastructure is you're going to share costs, and number one. But number two, you should be able to have much more open access, because if you've got 10 different people who are accessing and sharing an infrastructure, your ability to go from 10 to 20 to 30 is going to be a lot easier than if you had bilateral single instances, and then you're going to try and get 20 or 30 participants coming into that. So clearly, benefits of shared infrastructure are there. And I think one of the key trends that you've seen around the world is domestic shared infrastructure versus global shared infrastructure. And so payments are seen as a systemic risk. That's why we have DSIBs. And you've got to ensure that you fully understand that, and you make it a domestic priority. So I think that that shared infrastructure approach is absolutely the right approach when it comes to payments. As said before, with the volume-based pricing and open access and ensuring that the prices are the same for small or for large, we work that through constantly throughout all of our products. And we want to be sure that we're competitive, want to be sure that we're open. We've worked hard on this topic over the last 12 months, particularly around e-transfer. And as I said, when I get to Indu, I'll talk about some of the sort of outcomes of that. And I think that's probably the easiest place for people to hear about it.
Right. Back to the demand for real time payments. We're a business, so to speak, ourselves at FinTechs Canada. Sometimes we need to be paid. I am often frustrated by how often people choose slow payment methods to pay us. What is the demand really in Canada for real time payments? Like if I'm being paid, I want it fast, but if I'm paying, I want it really slow. So how do you see that tension playing out in the market?
Yeah, I think the demand is huge. Um, so so why, I hear you say as a small business or even as a large business, the longer I can hang on to my money, the better. So maybe I should just stick a check in the post and hopefully it gets lost and I'll reissue another one, and et cetera, et cetera. But actually when you look at the account payable and the account receivable market opportunity, that's the technical terms for, what we're talking about here. It's not about just the payment. If anything, that payment's getting commoditized because it can go onto rails. It's about the value add that sits around that payment. It's about the securitization of that payment to prevent fraud and detect fraud. It's about the reconciliation automation that's available, and that automation to enable tasks, tax filing tasks, or other payment reconciliation tasks, just to be not requiring tens of people or hundreds of people, but to be able to be done digitally via automation. And AI is a new technology stack that is really, really going to help out with that. So that's what matters, is all the pieces around the ping. And when you have a sort of digital payment rail that is designed for open APIs that enable people to plug and play, and then they really focus in on the problem that business has, reconciliation, or the problem that the individual has, not knowing all the payment credentials of the person you're paying. You then go and solve those problems, but you want to complete the transaction, so you use that open access, real-time settled capability. And Steve Jobs said, if we went around and asked everybody what the new iPhone should look like, never have launched that iPhone. He anticipated what the problems were that people had and designed and produced something that, history tells us one of the most successful products ever designed and produced. And so that's all about product centricity and understanding customers' needs and wants and problems that they're solving, that they need to solve today. So, and that's our job, is to try and work that out for consumers and for businesses going forward.
Given that e-transfer feels real time to many people who use it, who is it really asking for real time settlement in the back end?
I think it's the innovation opportunity is asking for it, because you are going to be able to build a much richer experience for the customer or the business with real time, with RTR in the background. And then RPAA is going to enable more players to come. When you have more players, there's going to be more focus on meeting those needs and wants. And then the consumer banking framework is going to add to that as well. So it's an infrastructure play that is going to raise the tide for everybody, and see the DSIBs, the credit unions, the other FIs, as well as the fintechs, global tech, and coming in to accelerate digital opportunities, to accelerate the digitalization of payment products and services. And there's a long road of innovation ahead of us with the right infrastructure, and that's what we're going to get. So a rising tide, is good for everybody. And that's part of the message as well, is you can't really do anything on your own in this digital payment world. You've got to partner and work with a whole bunch of different people in order to bring these propositions to market. That wasn't any different for the iPhone and iTunes when it came on, and the disruption capabilities. It was a myriad, a spider web of partnerships in order to get that innovation through. It's the same today.
I've always seen two big motivations for going to real-time settlement in the retail space. One is related to risk management. Perhaps there are some regulators who are uncomfortable with the level of credit risk in the system, or perhaps they've seen other jurisdictions do this and they feel like they ought to care more about credit risk in the system. And then by managing the credit risk more effectively, you can open up access to the system, create a more level playing field, promote more innovation, all that good stuff you had mentioned. If you disagree with these two things as like the big motivations, can you talk me out of that view? Or alternatively, if you agree, interested to hear it.
No, I think those are two good reasons why the motivation originally for RTR came along, and the other 50 real-time settlement systems around the world, improve risk levels and open access. I wouldn't dispute those things. I think one of the key areas, as we're talking about real-time settled payments, is real-time fraud problems. And the way that we're seeing real-time fraud problems manifest itself is around scams. And scams are a massive social, economic, and political problem of our day and age today. And we got so many proof points that tell us that, whether it's people who are reporting that they've been scammed, and most people don't even know who they would call up in the first place if they were going to be scammed. So the fact that we've even got $600 million annually of scams being reported, with most people not even knowing who they'd call up, probably means that our problem is more in the 5 to 10 billion a year. And for every scam that happens and loss that happens, to be able to investigate that and get to the bottom of that, you've probably got a 4x versus that. So if it's costing you 5 to 10 billion in the actual scam, maybe it's more like 20 to 40 billion in the actual cost of scams. And so we've got to come together as an industry to combat scams. Canada has a big problem, as do countries all over the world. And the key is for us to think about those scam use cases in the design of the fraud capability for RTR. And the way we think about it is it sort of comes in 4 areas. One is that you need to understand who's paying and who's being paid. So you need to be able to identify and verify those two different parties. You need to then be able to score the transaction that gets sent and the transaction that gets received. They're two different parts of the transaction, and use machine learning AI to score them and produce reports and make it consumable for scoring for fraud departments. And thirdly, you need those transactions to be able to be validated against risk lists or negative lists, or for example, mule accounts or other bad actor lists is the third area. And all 3 of these areas then need to get underpinned by data that is provided by multiple parties in order to support these sort of algorithms that are happening, whether it's identifying a payee, whether it's analyzing the transaction itself, or whether it's actually a risk list that's there. These algorithms need to access data. They're useless without very rich, many attributed pieces of data on consumers and businesses. And so that's what we want to put in place. And this improved risk management that you talk about as the potential for RTR, that's a big piece of it, what I've just described. Because if you could do all of that, you could have a safer, more secure payment rail and payment capability than other non-RTR payment rails that are out there. And that's what you want.
There's a lot of work going into um, uh, detecting and preventing fraud, a lot of proactive work. Do you think Canada is doing enough to protect consumers once the risk of fraud has materialized? There's obviously authorized push payment fraud, which is a little tricky in the sense that the person has authorized and pushed the payment themselves, but there's presumably also a lot of, let's just call it unauthorized fraud or fraud that's hard to really blame the customer for. Do you think Canada does enough to protect consumers in those types of scenarios, and why or why not?
Yeah. So unauthorized payment fraud, typically your card fraud versus authorized payment, which is typically the real-time settled scam, right? And it's really the APP side, I think, that we need to be focusing this conversation on, and is the big problem. CBA has convened a cross-industry anti-scam alliance, and this is probably, we're within the first 6 months of this alliance. The key is that you've got to widen the net as much as possible. A lot of these scams take place across the cell phone networks, whether it's iPad or phone. A lot of these scams originate at social media sites, if it's WhatsApp or Facebook Marketplace. And then they leverage the bank infrastructure in order to transfer value in these scams. So those are three industries: the social media industry, the telco industry, the banking industry, who need to collaborate on a global basis, a regional basis, and a country basis in order to go after scams. Is the world doing enough around scams? No, I don't think so. I think it's a really deep social problem for us today. We certainly in my family, always the one who's saying, "Hey, get off your phone. You're like, 14 hours on the phone, can't be mentally healthy." But then the next side of that is getting scammed on the phone because you're on it so much and you're leaving such a digital imprint for bad actors to go and leverage. And we've got to get on this as a global society because it's only getting bigger and bigger. And it's not just you and me that it hits. The small business, it could put a small business under pretty quickly with one good scam, one bad scam, one highly effective scam. So I think we need to keep doing what we're doing. We need to accelerate what we're doing, and we need, I like that there's a Dutch outfit called the Global Anti-Scam Alliance, GASA, Gaza. And I really like what Georgie, the founder's doing there, just because, he's doing something about it on a global basis, starting with small steps, and totally support, the work that they're doing. And that's really a lot of what's behind our fraud investments that we want to make is it's all around the scams and doing the right thing to protect people against scams.
Right. I believe it was a report from ACI Worldwide that said or found that Canada cracked the top 10 for payment fraud, but did not yet have a system that clears and settles in real time, which I found interesting. Given Canada's ranking, if I mean, we take the reports finding at face value, why aren't financial institutions working with payment system operators today to build more capabilities at the center? Like, why isn't confirmation of payee already a thing? Why is my FI not checking with me to make sure the person I'm trying to pay is actually the person I'm intending to pay. I mean, it's fine to set up these round tables and bring in all these other partners you can collaborate with, telecommunications companies, social media platforms. But it strikes me that we're still not doing enough in the financial sector, let alone beyond it.
Yeah, so I think confirmation of pay capability is actually prevalent throughout many different payment products in Canada today. So with e-transfer, it's confirmation of pay. With a card payment, there is inherently inside of that payment is a confirmation of pay. With a wire transfer, there are a lot of checks that are happening respective to a confirmation that the payee is accurate. So I'm not sure I agree with that. I think that there is confirmation of pay capability that's there. Can it be accelerated? Of course it can. I think it's also very important that you have an ability to understand who's paying, and the payer trust score is very important because a receiving institution needs to understand better where this money is coming from. And often there isn't enough information for the receiving institution to understand. So they're receiving blind and they can't make the appropriate assessments around that. So we need to continue to invest in payer trust scores, confirmation of pay. I think we need to, my point before about the cross-industry data sharing, we need to share data that we can today on the existing data sharing agreements that we have. And then we need to put new data sharing agreements in place in order to ensure that that data can be accessed centrally and can be used centrally in order to enrich risk lists, to have more effective transaction scoring capabilities, and to be more certain of the payee and the payor.
One more question about the RTR before we move on to what's on the horizon with Interac. This question is based on some of the questions and chatter in the in the more say insider circles in the payment scene, maybe by the water cooler, so to speak. Doing things by committee sucks because there are too many interests in the room and no logical way to organize them or impose some kind of hierarchy on them. That is, I think, I don't think I'm saying anything controversial. One of the reasons why the RTR has been such a difficult program. There are many reasons. I don't think we can chalk it up to just one, but I think that's certainly been one of them. And it's always made me wonder, and a few others I talked to about this sort of thing, why partner with Payments Canada at all instead of just building this thing by yourself as Interac?
Well, Payments Canada is a scheme operator for RTR. And so the RTR, it's like Visa's a scheme operator for Visa debit, and MasterCard's scheme operator for MasterCard credit. Payments Canada is a scheme operator for RTR. And so we are a provider to Payments Canada for that.
But why didn't Interac at some point wonder or say, look, this is taking too long. Regulators have some objectives that they would like to solve here. We could just we could just build this all in-house. We could build the settlement engine ourselves or work with a service provider to build that for us. We cut out one of the middlemen. The governance of this program is a little more straightforward, fewer interests around the table, easier to organize them, easier to impose. Like, would we have solved some of the governance problem had Interac just done this by itself? And would we maybe have a system by now?
So, banks don't typically introduce settlement systems. So if you go around the world, the commercial banks are not putting settlement systems in place. That's typically the role of a central unit, a government unit that's doing that. So the banks here in Canada innovated on the existing payment rails. They brought a an e-transfer system to market that looks like it was real time to the consumer. And so the consumer's needs and wants were satisfied with the real time P2P and small business real time payment acceptance. And it did that through sort of innovative ways of bilateral relationships on a fairly old um, infrastructure. And in fact, I'm wrong in saying that. It's on the links infrastructure. It's not on a fairly old infrastructure. But if you look around the world, other innovations like that have happened, but they've happened on the batch system that's been in place for decades. Here in Canada, they did it on the high value real time settlement system links. So it's typically not the role of a commercial banks to go and set up settlement systems like that. Government would set that up for total ubiquity, and then the commercial banks would be some of the biggest users of that, which is what's going to happen here with e-transfer. And then new players and PSPs who are also going to have oversight on them are going to have access to it. So this is a pretty standard playbook, and I think is the right playbook.
Historically, though, didn't our banks run the clearings through the CBA? I mean, before the Canadian Payments Association was created in the 80s. It's not like our banks are strangers to operating these sorts of arrangements.
I'm not saying they're not strangers to operating, right? So we're going to be technically operating the real time system. So I think the setup that we have is appropriate. I think it's best practice around the world, and with RPAA, consumer driven banking, and it's going to be a good setup to innovate, and that's what we should focus on. We should focus on, okay, what do the consumers, small businesses need in order to increase the velocity of money, make it easier to accept and to send, and that's what matters, and put the value added services around it.
Okay. I want to know what's on the horizon. You were a chief product officer, if I recall correctly, at ACI Worldwide. You brought in a chief product officer from Sweden's fintech scene, who's the chief product officer, I think, at Interac now. Interac's access to its payment systems has opened. I've long heard rumblings about other cool, exciting things coming and happening, which makes me think that there's this, there seems to be like this refreshed intensity about, as you alluded to earlier, building great products, especially for the future, not just catering to the needs of the past. So just tell me, like, is something different in the drinking water at Interac? What's going on? What are the most exciting things that you're looking forward to that might surprise people, or that might be new to some people from Interac?
So earlier on this year, we looked at our strategy, and we assessed what our strategy was and what is it going to be for November 2024 through October 2027. And so that's 3 years. We're in the second month of our 3-year strategy. 3-year strategy is clear. It's that we are going to continue to evolve the 3 core products that we have in the market today. The first one is debit. Second one is e-transfer. And the third one is verify. And with debit, we're looking to extend its capabilities into the digital commerce space. With e-transfer, we want to extend its capabilities into the C2B and the B2B space. With verified, we want to extend those capabilities to be more ubiquitous in private industry as well as government and banking than it is today. So we're looking at sort of growth rates and investments in those 3 core businesses that really give new use cases and meet customer problems, needs, and wants in those 3 specific areas. And then there are 3 new investments that we're making, and they're big investments we're making for the future. The first one we spent a lot of time talking about is RTR. And as I said, we're going to be a technical operating partner for Payments Canada. Once it's live, we're going to build the fraud capability integrated in. And then lastly, we're going to be a implementation partner and make sure that our exchange that we've built works. So that's the first piece of it. The second piece of it, which is highly connected, but has some differences, is the fraud prevention and detection capability. And fraud prevention and detection to combat scams and the ACI Worldwide report that you just talked about. It's a global problem, and we all need to collaborate to prevent scams and detect scams. And e-transfer is one of the vehicles being used today for scams, and therefore, we are the right person to look at that centralized capability to prevent scams. So that's the second piece of it. And the third piece is really around the bigger digital commerce play. And the customers, you and I, and banks and businesses as well, we're interacting with our financial institutions digitally more and more. In fact, some of us don't even want a physical relationship. We just want 100% digital relationship. And as a result, the ability to adopt digital payment methods only, and then to have a digital relationship that we would buy other products through, whether it's other credit products or other insurance products or wealth products, whatever it is, that's our financial well-being. We're working on a digital commerce platform that's made in Canada for Canadians, that's very specific to how Canadians live their financial lives today. This is a very loyalty-centric market. And a lot of the financial institutions have very effective loyalty programs. So to have a digital commerce platform that consumers will go to first as they pay for products in the digital space, e-commerce space, and then for that platform to be able to be used by the different participants, whether it's a merchant wanting to use it for offers that they may put onto it, whether it's an FI who wants to use it in order to also offer other products, other credit products or wealth products. That's what we're working on. And the first sort of phase of that is in a very sort of limited, closed pilot today. So not a lot of publicity around that. As we evolve that, we'll extend the pilot in 2025. And then, we'll be looking to sign up Canadians onto this digital commerce platform. So it's a longer term big play into the whole world of digital commerce and ensuring that we have a made in Canada for Canadians offering that meets the needs and wants here.
I can't wait to hear more about that, and I can't wait for it to be more publicized. So I'll just leave you with this last question. When you think about the end state, what this thing is eventually going to be, what it's going to look like, whose money are you going after? Who are you competing with? Is it a swing at Apple? Is it like, what is it?
Yeah. So end state, let me just end state for Interac in 3 years' time, as I talked about that strategy, Interac would have doubled its offerings in the marketplace. So it would have gone from a company that has 3 core offerings to a company that has 6 core offerings. And this last 6th area that we're talking about, a digital commerce, is huge. And so, who do you use in order to help you to, transact digitally in
Apple
the
Pay,
e-commerce
a
space?
lot.
Use Apple Pay, use PayPal, Amazon when you're on Amazon. And so, these big tech companies are the ones who are really helping us in the digital world today, which is great. And as digital commerce starts and it's at the early stage of its evolution, you need scale in order to do that. And the scale players in the world today are these global tech companies. But as this becomes more and more just part of our everyday lives, you're going to see domestic and regional plays in the space. You're already seeing it. So in Europe, you see this with Swish in Sweden, Bazum in Spain, Bika in Poland, and you're seeing these digital commerce platforms that make it easier for you and me and merchants to be able to transact in that space. And so it's a natural evolution that you're going to see as we, and the great thing about Apple, from an Apple point of view, is you've got the Apple Wallet that's sort of, you can rinse and repeat in multiple markets and turn on and off various capabilities, but the look and feel's the same whether you're in the UK, US, or Canada. Well, Canadians aren't like Americans or Brits, and they are themselves. They are who they are. They are unique in the way they think and talk. And why is that any different in the digital world? And so I talked about the prevalence of loyalty schemes here. You don't see that in the UK. Barclays Bank doesn't offer loyalty schemes to go and bank with Barclays Bank, but you see it here. And so there's a different mindset and a different way that the digital experience needs to reflect. And so that's why it makes sense to have a made in Canada for Canadians digital commerce platform.
Jeremy, thank you so much for joining us today. I hope to have you back where we talk just about this digital commerce platform, maybe sometime in 2025.
Fantastic. It's been great. Thanks a lot. I really appreciate the time, Alexander.
And that's a wrap for this episode. Thanks for joining us. If you're looking for more, visit us at fintechscanada.ca or follow us on LinkedIn. See you next time.